Stock bubbles don't grow out of thin air. They have a solid basis in reality, but reality as distorted by a misconception. George Soros, legendary trader, not one of my favorite guys in the world, but you have to give the devil his due. He knows how to make a dollar, in fact, many billions of them. And what's so fascinating about George Soros' quote there? Stock market bubbles don't grow out of thin air. They have a solid basis in reality, but reality is distorted by a misconception. Where we see the misconceptions and where we see reality and where we see the distortion are two different places. The reality is seen in the charts. The distortion and the misconception occur in the news media and out in the marketplace, where people aren't paying attention to price movement and stock charts. What we do here on a daily basis at chartingwealth.com is revolutionary. And I see y'all's comments. And in fact, you can look in the YouTube comments, the Facebook comments, the emails that I receive all the time. I was actually looking at various postings at iTunes and the other folks that put out our RSS feed and provide podcasts, all the different podcasting services. And it was very heartwarming for me to see what people said. And they talked about how simple and effective what we talk about is. Because, my friends, so many people want to confuse you and have you think you have to rely on them. Think about that. To turn you into a slave or to turn you into someone who believes they can't figure out what's happening. And they have to have a guide, like a spiritual guide, to take you to nirvana, to show you what's real. And in fact, reality is standing there, slapping you in the face if you will just turn and face it and see what's really going on. The news media exists to sell you commercials. Their masters are the businesses that advertise there, and they want you to read their papers. They want you to watch their television programs. They want you to listen to their radio broadcasts. They do all these things in the financial news media to get you to pay attention to them. But when has that ever worked for you? When has that ever done anything for you to make you any money, to teach you anything, but to be nervous and to realize you're probably an idiot? That's the bottom line. And when you get away from all that, because you notice we don't talk about news here. I never talk about news here. Why? Because we're too busy delving into reality, what's really happening. Because, my friends, the only thing that matters in the financial world is price. That's all that matters. And we can see price flows on these charts. And this is not rocket science, okay? This is being able to see weekly vertical crossovers, being able to use that huge trend when it changes to your advantage, to not write it down when it's going down and to write it up when it's going up. A good friend of mine is talking to me the other day. He's made a lot of money in life and was telling me about where he has all his money stashed for his family and what he's doing with it and how it's all invested. And again, he was one of these dollar cost average people. And I said, well, my friend, what if you could see when the market's going down and not write it down? And his answer to me was, well, you can't do that. That's called speculation. And I just realized at that point I was throwing my pearl before swine. Not that my friend's a swine, that's a biblical reference, but it means that the person's not going to listen to the nuggets of wisdom, the gold I was handing out. He thought it was worthless, so I shut my mouth. I've learned. If people are ready, they come. If they're not ready, they don't. They argue, they tell you they know more than you, all that. Those of you listening now that have had that light bulb click on, welcome. Those of you who don't think this is worth your time and you can't be convinced because you know more, go away, because I can't help you. Now, those who we can help, let's get into it. One last thing that I love to share. Do you know when the Coast Guard helicopter comes to a boat wreck and there are people floating in the water and they have 30 people in the water and room inside the helicopter for 6 people? Do you know who they rescue? They rescue the people that swim toward the helicopter's net that they drop down, or they have a diver that goes in the water and they have that basket. They rescue the people that swim toward the basket. They can't help those that won't let go of the flotsam and jetsam or whatever it is and swim over. Those people drowned. So all of you who hear the helicopter blades and see the diver in the water and the basket and are swimming toward it, welcome. We're going to take you on board and you're going to be saved when the big market crash comes. And it is coming. And in the meantime, we're going to learn how to ride things up and down on the four things we follow: the S&P 500, the Nasdaq 100, 20-year bonds, and gold. Speaking of that, our two stock indexes, the Nasdaq 100 and the S&P 500, are up for the day and in fact have recovered all the losses they had on Monday. Isn't that amazing? Oh gosh, everything was just turning down, rolling over. People were shorting the market, and guess what? You got screwed again. And what's happening to bonds? Bonds down a little bit for the day. Gold is down more for the day. We'll talk more about that, but let's jump into these charts. Again, 10 to 15 minutes a day is all we ask, and we'll try to hold this one at 10 to 15 minutes. I'm closer to the 15-minute mark usually than I am the 10. But what do we see going on? S&P 500 so far down week, but we haven't crossed over going down. Now, is the price percent oscillator heading down? Yes. Have we had a weekly vertical crossover yet? No. May we have one soon? Yes. But until that happens, we're not going to be jumping into something that hasn't occurred. We are trend followers. And when we see clean trends, we follow them up, but we don't get in until that occurs. Now you might say, well, gosh, if you got in at the very bottom, yeah, if. That's called Monday morning quarterbacking. We wait for a trend to be established. Once it's established, it's much easier and safer to ride it up. First rule of trading and investing, don't lose money. Second rule, remember rule number 1. So again, there's plenty of room from the time it crosses over going up until you get out somewhere near the top or somewhere along the way. Okay, remember, your money's in a savings account, ain't making jack squat for you. And we're talking about riding things up and getting out before they go down. So again, want you to practice trade with us. We're not a stock calling service, we're an education firm. And we're going into our second week, as we see on these charts, of down movement. That's not saying sell everything and go short. Nothing like that. We go from the weekly chart, and again, derivative oscillator losing momentum, price percent oscillator heading down, but still in confirmed up move on the weekly. 2 days different. 2 day was going down for 8 days. Okay, that ended on Wednesday. Thursday was an up day, like we said, up 0.93%. We see the average pace on our Heikin-Ashi candlesticks blowing through a very strong down trend line on the 2-day chart. Derivative oscillators also lost some energy. Just the first day of the latest 2-day candle. It'll finish drawing on Friday, and we'll call the total candle. It could change direction. It could flip and be a red candle if there's a huge down day on Friday. But again, it's an up candle right now. Price percent oscillator, again, which was heading down, down, down at a steep angle, has leveled off. Still going down some, but not nearly as strong as it had been. We go to the 4-hour chart. What do we see there? 4-hour chart bottomed out on Monday afternoon, the 13th. Remember, that's where we had that big down move. And then since then, but for one red spinning top in the afternoon, in the morning on Wednesday, there have been green up candles. Up strongly for the day, pushing through the 2-day trend line. We had a 4-hour crossover. We saw that happen. Yeah, it happened on Thursday morning, and then more up in the afternoon, sort of leveling off. But again, pushing through the 2-day trend line. What are we waiting to see happen? We're waiting to see what's going to happen with the 2-day. Is it going to rotate over going up like the weekly? Or is the weekly going to rotate over going down? Remember, our biggest chart, that is the big chart, the quarterly chart, still in a confirmed down move. We had that start at the beginning of the year. This quarter's been up for a while, but who knows how it's going to end. There's typically going to be some kind of summer low, and we'll see. We may be moving toward that. Hasn't happened yet, but we do have 2 weeks of down movement so far. So we'll continue to watch. Don't forget, at the end of the day on Friday, we'll prepare for you our comprehensive review and forecast and fire that out to all corners of the globe. What's going on QQQ, the Nasdaq 100, the tech stocks up for the day, 1.00%, made up the losses too that started on Monday. Now we're looking at our Heiken Ashi average pace candlesticks. We see things going down. Derivative oscillator losing momentum. Price percent oscillator heading down. We go from the weekly to the 2-day. What do we see there? Well, that crossed over going down, of course, back on Friday, the 3rd of May. And we see we had 8 days of down movement, and the first day of this latest 2-day candles just pushing through that 2-day trend line. Price percent oscillator going flatter, not flat yet, still negative, and the derivative oscillator gaining downward momentum. We'll see how that candle finishes up on Friday. It's a 2-day candle, like we said, and we can see that we've had 3 days of up movement after things bottomed on Monday afternoon on the Q. So again, pushing through that 2-day trend line, just like we saw with the S&P 500. Derivative oscillator gaining upward momentum, price percent oscillator crossed over and heading up. So again, waiting also for the Qs to sort out. Markets are in flux, and you know what? That's okay. We will be patient because they will set up, and when they do, we will ride that movement up or down. Now, those of you who don't know what I'm talking about, why would you ride something down? Isn't that a loser? Well, we have something called inverse ETFs that allow us to actually make money when things move in the opposite direction. I want you to practice trade those too. For the Nasdaq 100, the inverse fund that we typically get you to look at is something like PSQ. So instead of the 3 up candles that are going on right now with the Qs, when it rolls over, those are currently 4 days of up candles. Those on PSQ would be down candles. Just punching that in for the folks that are watching. And of course, we see that. But when the Qs is going down, PSQ is going up. So again, there's always a bull market somewhere, as Jim Cramer likes to say. And inverse funds are your bull market when the market itself is going down. So we want you to practice trade those and get used to thinking that way. So instead of just pulling out and not losing money, what about making virtual money? That's an opportunity also, isn't it? Just a little bit of sophistication that can make all the difference in the world. Let's go to 20-year bonds. We see that they're having an up week, second in a row, pulling away from the red signal line. That is the price percent oscillator, and the derivative oscillator has gone positive. We go from the weekly to the 2-day, and of course the 2-day has crossed over going up. That occurred back on Tuesday, the 7th of May. Bit of a pullback underway. We can see where things just didn't peak out. Again, down 0.33% for the day. It's the first day of this latest 2-day candle. We look at the 4-hour chart. It's not a bad thing. What we've been waiting for the 4-hour chart to do is pull back, crossover going down, and then back over going up, which would be our trigger. So we'll continue to watch and see if and when bonds give us a setup so that we might be able to jump into a practice trade there. So let's move now from bonds as everything continues to try to shake its way out. And remember, we're entering the summertime trading zone, typically the suckiest trading zone of the year. Why? Because a lot of the volume goes out of the market. Not much volume, you get swings up, down, and sideways, and that's not what we want. We want charts that are trackable. So the crappiest time to trade, summertime. Best time to trade, fall, winter trading zone. But we follow the markets all the time to look for all the opportunities. And if you can successfully practice trade in the summertime, you're going to just love the hell out of the fall, winter trading zone. Lastly, we go to gold. What do we see happening with gold? Gold's in a confirmed down move on the weekly chart, still heading down, losing momentum on the derivative oscillator, but that price percent oscillator is heading down. Up week so far, gold down pretty big for the day, 0.72%. We look at the 2-day chart, and of course, that's where we can see it. First day of this latest 2-day candle, red down candle has a little bit of a wick on top, a long wick on the bottom. Price percent oscillator is a little less than flat. Actually looks like it might be heading down a little bit. And the derivative oscillator still has oscillation carrying it up a little bit. This is just the first day of that latest 2-day candle. As we said, we can really see the down movement as we look at the 4-hour chart. It pushed through and penetrated the 2-day trend line in the morning, followed by more of that in the afternoon. And we had that crossover in the morning. Well, it really occurred in the afternoon with the derivative oscillator flipping over -2. So again, waiting for gold to sort its way out. Is it going to sort its way out, continuing to move back down again, punching through maybe 119.50 this time? We'll wait and see what there is to see. Again, markets are in flux. We're waiting for things to sort out so we can make smart and intelligent decisions. Folks, that's where we are as we end the day. If you've not purchased our book and you want one, we have it for you. Follow the link in the show notes. If you happen to live overseas, all you got to do is email us, cw@chartingwealth.com. For some reason, Square does not clear foreign credit cards. We will nonetheless send you a PayPal invoice and mail you your book wherever in the world you may be, even the Gobi Desert. If there is some type of land animal that will bring your book out to your tent, we will ship that out to you also. My friends, God bless. It's always great to hear from you. The excitement that we get from your emails and your postings keeps us going. If you really like what we do, I encourage you to become a Patreon supporter. We really appreciate our Patreon folks, and we give you lots of great stuff. Intermediate level, you get a free book. You also get a free 15-minute phone call once a month. I say free. That's from your decent donation for that middle intermediate level. For the entry level of Patreon support, of course, you're always engaged in our monthly question and answer telephone call-in, where we take your questions and we answer them during the course of the call. That's always fun. Plus, you also get you get your review, your monthly review of the stocks, ETFs, sector funds, whatever it is you're interested in us looking at, telling you what we think about them. So again, lots of different levels of support. We so appreciate you. 10 to 15 minutes a day is all we ask. Print out your daily market worksheets, your weekly market worksheets, your trade worksheets. Fill those out as often as possible, always with a trade, and at least the weekly market worksheet once a week. Fill that out over the weekend while you listen to the comprehensive review and forecast that we'll do at the close of the markets on Friday and every Friday. And again, love to hear from you. cw@chartingwealth.com. God bless. All the best from the whole team here at Charting Wealth World Headquarters.